Hello and welcome to this special report here at XM.com. We'll be discussing the recent retreat in gold prices and the outlook going forward. I'm Maria Pachordes, and joining me is Senior Investment Analyst Marios Hadjikyriacos. So Marios, last week there was a sharp drop in U.S. yields, which was negative for the U.S. dollar. Usually these conditions are positive for gold prices, but not this time. Can you tell us why this was the case and what traders should look out for?
Definitely. Hello, Maria. Gold has been a very interesting instrument over the last several weeks, ever since the tensions in the Middle East really started. We saw a huge rally, almost more than 10% in gold in a matter of a few weeks, which for gold, that's a pretty huge move. But then the rally started getting exhausted, right? We've been seeing gold prices fall lately, even though, as you already alluded to, we've had some favorable conditions for the yellow metal. So what do I mean exactly? You already mentioned this, that falling yields and a weaker dollar are positive for gold. But why is that the case? Well, the logic is pretty simple, Maria. So yields are essentially the price of money, right? So yields on government bonds, they can almost be considered interest rates that are determined by the markets instead of central banks. So gold doesn't pay any interest to hold. So when yields or interest rates fall, the metal becomes more attractive by comparison. Now, the problem with gold is that we've seen yields fall pretty dramatically in the last few weeks from their cycle peaks, essentially, but gold hasn't been able to capitalize, and that's worrisome. So the way I'm reading the situation is you've had these positive developments for gold, but gold prices fell instead. So there must have been something else that was even more powerful in a negative direction that overpowered these positive effects. And I think that X factor, Maria, was geopolitical safe haven demand falling off, right? The logic being that a lot of people bought gold in early October after the attacks on Israel, fearful that this could escalate into a regional conflict, perhaps one that involved Iran as well. So a lot of people bought gold as a hedge against this risk, but that risk hasn't played out. We've seen, of course, the situation in Gaza and Israel. It's a humanitarian disaster, but as far as the markets are concerned, it hasn't escalated into a full-blown regional conflict. And since that hasn't happened, I think we are seeing a lot of that earlier demand go away. A lot of people that bought gold about concerned about geopolitical risks, about a conflagration in the Gaza war, a lot of those people are probably exiting their positions, and I think that's what explains the weakness that we've seen in gold prices, even with yields coming down lately.
So what's the near-term outlook for gold? What will it take for the precious metal to record new highs?
Yeah, so that's a great question. I'll try to focus on the longer term, and over the last 3 years, if you look at the charts, Maria, gold has essentially been range bound, trapped in a wide sideways range between the record high of 2072 and a lower bound around $1,680. Now, I think we're going to need a very significant catalyst to break out of this range. And the most powerful of those catalysts would be a return of recession fears in the markets. If market participants start to panic about the economic outlook and a potential recession, that could fuel bets for Fed rate cuts, pushing yields down, and therefore making gold more attractive and giving gold that ammunition it needs for another run towards record highs. However, the catch is that this is probably a story for next year. The economic data polls have started to weaken. The US economy is still doing relatively well, but we could see the economy weaken heading into next year, and that might be let's call it a fertile environment for gold. And of course, a weaker US dollar could also do the trick, because gold prices are already at the record levels when denominated in any other currency except for the dollar. So the strength in the dollar has been another factor holding gold back. So to conclude, Maria, the performance of gold is going to be decided by a combination of geopolitical tensions, the path of interest rates, and how the economy, the global economy evolves. And in that sense, I think that the near-term outlook remains negative because we are seeing this geopolitical demand fade. However, the tide could turn next year as the global economy loses steam and some regions go into recession, and that might be what allows gold to go back to record highs.
Marius, thanks so much. And thanks for joining us at XM.com.